There was a time when a company with no real truck was worth more than Ford, not more than a random startup, not more than a regional supplier, more than the Detroit giant that helped put the world on wheels. Let me take you back to June 2020. Ford Motor Company had over a century of factories, patents, and family history behind it. Millions of F-150s and Super Duty trucks grinding across highways and job sites. An empire of steel, rubber, and gasoline that had survived world wars, oil shocks, recessions, and bankruptcy scares. On the other side of the ticker tape sat Nikola Corporation, a pre-revenue startup with a prototype, a dream, and a very good story. For a brief, almost surreal window, the market said Nikola was worth more. A business that had never mass-produced a road-ready truck, that had never delivered fleets of vehicles to paying customers, carried a market cap north of $30 billion and edged past Ford. This was not a quiet, technical anomaly. It was a neon sign flashing above Wall Street. Promises had become more valuable than production. Nikola's rise was the purest expression of a moment. The SPAC boom was in full frenzy. ESG money was hunting for the next green miracle, and interest rates were near zero. Hydrogen fuel cells, battery electric semis, zero-emission freight corridors, it all sounded like the future. When PowerPoint beats assembly lines, when glossy renders and dramatic videos outrun welders and torque wrenches, what kind of behavior does that invite, and who finally pays when the music stops? At the center of this story stood Trevor Milton. Not an engineer buried in CAD files and lab tests, but a salesman. His life did not follow the classic path of the quiet technical genius. He was charismatic, relentless, always pitching. His gift was narrative, the ability to stand on a stage or a TV set and bend reality with words until investors, partners, and the public could almost see the hydrogen flowing and the trucks silently conquering mountains. His story is one of money and power built at breathtaking speed, at times inspiring and at times chilling. A kid from a modest background who learned to sell early, who moved from one venture to the next, and who finally found in Nikola the perfect vehicle for his ambition. It's an example of what happens when markets reward vision more than verification, when a rolling prototype in a viral video can move tens of billions of dollars. Because behind that towering valuation lay a ghost truck, a company whose most famous driving moment would later be revealed as a vehicle rolling downhill. Ahead lay the Hindenburg Report, criminal charges, shattered wealth, and partners scrambling to explain how they missed the red flags. In this video, the path from humble beginnings to market darling to public reckoning will be traced, and how a salesman briefly outvalued a century-old car empire before the illusion broke. That driving moment was more than a clever camera angle. It was the perfect symbol of what came next. A company with no mass-produced truck, no real revenue, and technology still in question would soon be worth more than Ford, a century-old car empire that had actually put millions of vehicles on the road. Markets were about to prove that, with enough belief, even gravity can look like innovation. This is where the story turns at times inspiring and at times chilling. Inspiring because it shows the raw power of vision and storytelling in modern capital markets, the way a single charismatic founder can summon billions with a microphone, a slide deck, and a dream of cleaner highways. Chilling because it's an example of what happens when that power is left almost entirely unchecked by due diligence, skepticism, or even basic engineering reality. Value can be manufactured out of vapor and then erased just as fast. Nikola was never just one man making wild claims. It was a perfect storm. There was a time when money was almost free, when interest rates sat near zero and investors were desperate to turn cash into the next great fortune. SPACs raised tens of billions, promising quick paths to the public markets with far less scrutiny than a traditional IPO. ESG enthusiasm turned anything electric, hydrogen, or low emission into a moral crusade as much as an investment decision. And hovering over everything was Tesla, the patron saint of impossible valuations, convincing a generation that the next trillion-dollar prize might be hiding in a warehouse with a prototype and a press release. Into that moment walked Trevor Milton. His story is one of relentless salesmanship rather than engineering genius, a life shaped less by patents and more by pitches. Before Wall Street ever heard his name, he had bounced through small-time ventures and failed startups, chasing contracts, promising logistics platforms, and alternative fuel ideas that never quite turned into durable businesses. The pattern was familiar: big vision, aggressive timelines, thin execution. But in a world searching for the next Musk, that pattern suddenly looked like potential. So let me take you back to the years before the 2020 peak, when Nikola was still private and Milton was still rehearsing the narrative that would move markets. He spoke of hydrogen corridors, revolutionary batteries, and a future where diesel trucks looked as outdated as steam engines. PowerPoint slides filled in for production lines. Rendering stood where factories should have been. Yet the audience grew, the money followed, and the illusion gained weight with every new believer. In this video, that arc will be followed from those early hustles to the moment Wall Street handed him a $30 billion crown, then through the public humiliation, the legal reckoning, and finally the quieter aftermath. Because the real question is not just how Nikola rose and fell, but how many other Nikolas are still out there, rolling downhill on momentum, only better disguised. To understand how a company with no real truck could be worth more than Ford, the story has to start far from Wall Street, on dusty roads in Utah and Idaho. There was a time when Trevor Milton was just a kid in a modest, deeply religious family, moving between small towns, listening to sermons about faith and sacrifice, while quietly obsessing over money and escape. His father did odd jobs, his mother held the household together, and there was never quite enough cash to feel safe. That tension shaped him. While other kids memorized Bible verses, Trevor memorized pitches. He didn't grow up around engineers or Ivy League bankers. He grew up around people trying to claw their way out of near poverty with whatever talent they had. Formal education never really stuck. He dropped out of college, bounced from one program to another, and quickly discovered that classrooms rewarded patience, while sales rewarded charisma. So he went where the rewards were: alarm systems, satellite TV, anything that could be sold door to door. He learned to read faces, to talk fast, to make strangers feel like they were stepping into a bigger life if they just signed here. Let me take you back to those early hustles because they reveal the pattern. Trevor gravitated to roles where credentials didn't matter, but confidence did. He wasn't designing circuits, he was persuading people that the circuits already worked. His story is one of constant reinvention, rapid promises, and a relentless refusal to be ordinary. When Tesla exploded into public consciousness, Trevor finally saw his template. Elon Musk was everything he wanted to be, worshipped online, treated as a prophet of clean energy, commanding an empire of factories and rockets with a single tweet. Trevor studied Musk's interviews, copied his cadence on social media, and started talking about disruption, sustainability, and a future where diesel would vanish. The difference was that Musk had armies of engineers. Trevor had PowerPoint. His first real ventures followed the same script. A security company here, a natural gas trucking idea there. He talked about revolutionizing fuel costs, building stations everywhere, rolling out fleets on aggressive timelines. On paper, the plans were flawless. In practice, execution always lagged behind the pitch. Deadlines slipped, partners complained, and the dream quietly dissolved, while Trevor was already telling a new one. Because he understood something the market was just beginning to reward. In an age of viral narratives and soaring valuations, the ability to sell a future could be more valuable than actually building it. At times inspiring and at times chilling, it's an example of what happens when a gifted salesman realizes that belief itself is a kind of currency. By the time he started talking about hydrogen trucks, Trevor Milton was no longer the kid from Utah. He was a man who knew how to command a room, raise millions, and make even seasoned investors feel they were late to the next Tesla. The only question left was whether the machinery behind the dream could ever catch up to his mouth. So when he finally stepped onto a bigger stage, he didn't just pitch a truck, he pitched a transformation. There was a time when Trevor Milton's vision wasn't hydrogen at all. It started with something far less glamorous, natural gas. Let me take you back to those early slides and small conference rooms where the dream was a cleaner, cheaper way to move freight using compressed natural gas. The idea was modest compared to what came later. Retrofit engines, leverage America's shale boom, save trucking companies money on fuel. It was practical, almost boring. But for a salesman who wanted an empire, boring wouldn't be enough. As the electric vehicle wave gathered momentum and Tesla's stock became a cultural event, the story shifted. Natural gas began to look old, even dirty. Hydrogen, on the other hand, sounded like the future. Zero emissions, water vapor exhaust, science fiction energy density. So the concept mutated. The trucks would be hydrogen electric, then hydrogen and battery electric, then, depending on the audience, whichever sounded more revolutionary that week. The branding move was no accident. Tesla had already rewritten what an auto company could be worth, so Trevor chose a name that echoed it like a mirror, Nikola. Same inventor, different half of the name, a quiet signal that this was the sequel, the next chapter in the EV revolution. Not only would Tesla own the car, Nikola would own the highway, the long-haul backbone of the economy, the place where real money moves. His story is one of escalation. The pitch grew fast. Nikola wouldn't just sell trucks, it would build an entire hydrogen empire. Thousands of miles of fueling stations, on-site production of hydrogen, zero-emission big rigs that you didn't buy outright but paid for per mile, with Nikola controlling both the vehicle and the fuel. It sounded elegant, vertically integrated, almost Rockefeller-esque in its promise of control and recurring wealth. On screen, the dream looked ready. Slick renderings showed futuristic cabs slicing through deserts and mountain passes. Concept art placed glowing hydrogen stations along pristine highways. Timelines promised aggressive rollouts, prototypes this year, stations next year, mass deployment right after. But behind the pitch deck, the reality was far less cinematic. A tiny team working out of modest facilities, limited original IP, heavy dependence on outside suppliers for batteries, fuel cells, even core drive train components. At times inspiring and at times chilling, the gap between appearance and reality began to widen almost immediately. Promised breakthroughs were often PowerPoint deep. Announcements raced ahead of engineering. And yet, investors, suppliers, even major fleets leaned in, enchanted by the narrative and the chance to be early to the next Tesla. It's an example of what happens when belief meets a bull market. Because in those early years, one thing was already clear. The story was moving much faster than the machines. The question was how long that imbalance could last before someone, somewhere, decided to actually lift the hood. The imbalance didn't slow them down. It accelerated the story. There was a time when every new press release from Nikola landed like another steel beam in a rising skyscraper. The company began announcing thousands of reservations for its futuristic trucks, long before a single fleet could actually put one to work. Many of these were non-binding. Some required deposits so small they barely covered a tank of diesel. Yet on slides and earnings calls, they appeared as a solid pipeline of demand, stretching years into the future. On paper, this looked like proof. Names of logistics companies, fleet operators, even large brands appeared next to big round numbers. 800 trucks here, 1,000 trucks there. A headline about $10 billion in potential orders. Because of that framing, investors didn't see a handful of interested prospects kicking the tires. They saw a line of customers, already formed, waiting for the doors of a new empire to open. Then came the MOUs, the Memorandums of Understanding. These were preliminary, often revocable agreements, but they were introduced to the world with the same drama as signed, ironclad contracts. Nikola would partner with a major European truck maker. Nikola would work with a national fuel retailer. Nikola would team up with energy companies to build a hydrogen highway across North America. Each announcement added another layer of perceived validation, another signal that serious adults had checked the homework and approved the plan. The language was always precise and yet strangely vague. Multi-billion-dollar potential deal values. Timelines that suggested production was just around the corner. Charts showing ramp-ups from a few dozen units to tens of thousands in only a few years. Because of that, the gap between aspiration and reality felt smaller than it actually was. The life of the company existed first in PDFs, PowerPoints, and glossy renders. Reality was expected to catch up later. For investors scanning headlines and bullet points, it felt like hard evidence. Big numbers, big partners, big markets. In a market already high on ESG narratives and the promise of clean transport, those elements were enough to override quiet doubts about engineering details or factory capacity. It's an example of what happens when money meets imagination in a season of easy belief. His story is one of relentless promotion, at times inspiring and at times chilling. Because of Trevor Milton's charisma and the way these announcements were staged, many people saw not a fragile stack of contingencies, but a finished building. Yet under the surface, most of it could disappear with a single revised press release. Let me take you back to that fragile moment when the empire was mostly email attachments and hopeful signatures. The world treated those documents as destiny. The next chapter would reveal what happened when reality finally asked to see the trucks. Let me take you back to December 2016, to a darkened warehouse in Salt Lake City that had been turned into a temple of the future. The lights were low, the screens were huge, the music was pounding with that familiar techno-apocalypse rhythm that says history is about to happen. And then it appeared. A hulking white semi, bathed in blue light, rolling onto the stage like a visiting spaceship. There was a time when anyone watching that live stream could be forgiven for thinking they were seeing the birth of a new empire. The Nikola One looked aggressive and sleek with its wraparound windshield, glowing logo, and polished side skirts, hiding what everyone assumed was a revolutionary heart. This, the audience was told, was a hydrogen electric long-haul truck that would crush diesel on cost, emissions, and performance. It was the physical proof that Nikola wasn't just PowerPoint anymore. Investors, media, and fleet operators had been primed for this moment. The company had talked about a cutting-edge hydrogen fuel cell, a massive battery pack, independent electric motors at the wheels, and a network of refueling stations stretching across the continent. So when that truck sat there under the spotlights, people filled in the missing pieces. Of course, it was nearly functional. Of course, the drivetrain was under the skin. What else could explain the confidence, the spectacle, the talk of billions in future revenue? Trevor Milton stepped on stage like a preacher who had finally summoned his miracle. His story is one of relentless certainty. This truck would change the world. This design would end diesel. This company would rewrite the economics of freight. He talked about torque, range, efficiency, and the death of the traditional engine. He walked the audience through the features with the ease of a salesman who knew exactly where every eye in the room was pointed. But listen closely to the language. He said the truck works, that it was fully functioning in the sense that systems powered on, that it could drive and operate. What he did not do was start it up, turn the wheels, and take a lap. The Nikola 1 never moved under its own power that night. It sat there, motionless, like a very expensive movie prop that no one wanted to touch too hard. Later investigations would reveal why. Behind the sleek body panels, the supposed drivetrain was a patchwork of components assembled for show. The gears didn't connect to anything meaningful. The hydrogen fuel cell system was incomplete. Cables were routed for appearance. Some displays were driven by hidden power sources, not by an integrated propulsion system. The truck could not, in any practical sense, drive itself off that stage. Yet the effect on the outside world was enormous. Because of the spectacle, the confident talk, and the hunger for a clean energy savior, most viewers walked away believing they had just seen a nearly production-ready prototype. It's an example of what happens when presentation outruns engineering, when the promise of future wealth, power, and disruption blinds people to the quiet detail that no one ever turned the key. At times inspiring and at times chilling, that night was the first time the world saw Nikola's technology up close. Almost no one realized they were staring at a prop, and the next time the truck appeared to move, it would be because someone found a hill. So let me take you back to 2018, long before indictments in courtrooms, to a lonely stretch of desert highway where Nikola finally showed the world its miracle machine in motion. The video opens like a car commercial for $1 trillion future. A gleaming Nikola 1 gliding along the asphalt, sun low on the horizon, cinematic drone shots, corporate logo pulsing on screen. For a few smooth seconds, the story is simple. The truck moves. Therefore, the dream works. There was a time when that was all most people needed. In an era when PowerPoint could be worth more than a century-old car empire, a few seconds of glossy footage carried more weight than 1,000 pages of engineering reports. The music swelled, the camera floated, the Nikola badge filled the frame, and viewers felt it in their gut. This thing is real. Not a prototype on life support. A product. A life raft to pull the industry out of diesel and into a new age of hydrogen wealth. But behind the lens, the reality was almost comically low-tech. Hindenburg Research would later reveal that the Nikola 1 in motion wasn't using a hydrogen fuel cell, a revolutionary gearbox, or even an electric motor. It was using gravity. The team had towed the dead truck to the top of a gentle hill, pointed it down the road, released the brakes, and let physics do the rest while the cameras rolled. No futuristic engine, just a very old one, downhill. The brilliance and the ruthlessness lived in the angles. Shot tight and low, the road looked flat. The horizon line was carefully chosen so the slope vanished. No gauges, no interior shots of an active dashboard, no continuous take from ignition to acceleration. Just fragments, truck rolling, logo flashing, music pounding. Because of that careful construction, because of how the human brain reads motion, millions walked away convinced they had seen a self-propelled hydrogen semi. Psychologically, this is where the story turns at times inspiring and at times chilling. Inspiring because it shows how much power images have to mobilize money, talent, and belief. Chilling because it's an example of what happens when that power is aimed at wishful thinking. A moving truck on screen short-circuits skepticism. Viewers don't pause to ask whether the motors are engaged. They simply feel the weight of 40 tons in motion and assume the hard part has been solved. When Hindenburg called it out, Nikola's defense leaned on technicalities. The company noted that the video never explicitly claimed the truck was propelled by its own powertrain, that phrases like "in motion" were, in theory, compatible with rolling downhill. On paper, that might pass a lawyer's stress test. In real life, everyone knew the intent. The video was designed so investors, partners, and the public would believe the Nikola 1 could drive itself. And if this is how the flagship proof of concept was handled, if gravity had to be dressed up as breakthrough engineering, it raises a darker question. What else in the Nikola empire was being held up by camera angles, clever phrasing, and a very carefully chosen hill? If the rolling downhill truck was the magic trick, the real illusion was happening on a much bigger stage. On Wall Street screens, Nikola's glowing logo sat next to Ford's blue oval as if they were peers, as if a PowerPoint deck and a century-old empire belonged in the same weight class. Let me take you back to that split-screen moment in 2020. On one side, there was Ford, sprawling factories in Dearborn and Louisville, stamping presses, slamming sheets of steel into F-150 bodies, paint shops running day and night, conveyor belts dragging frames past workers who had spent their whole life on the line. Ford was pushing out well over 4 million vehicles a year, pulling in tens of billions of dollars in revenue, feeding an army of suppliers and union families with every truck that rolled off the end of the line. On the other side, Nikola, sleek investor decks with glossy renders, concept videos with dramatic music, hydrogen diagrams, battery slides, total addressable market charts reaching into the hundreds of billions. A company with essentially no revenue, no mass-produced trucks delivered to real customers, and a flagship prototype that needed gravity to drive. Yet, for a brief, surreal window, that PowerPoint empire was worth more on paper than Ford. There was a time when factories, cash flow, and proven engineering were the unquestioned kings of valuation. But in the speculative frenzy of 2020, the market fell in love with story stocks instead. His story is one of a salesman promising to rewrite the future of trucking, and investors rewarding the promise long before the product existed. Revenue today mattered less than a slide that said 2030 with a towering bar of hypothetical wealth. Low interest rates poured fuel on that fire. When money is almost free, future earnings feel closer, safer, more real. Discount rates fall, spreadsheets stretch decades into the distance, and it's an example of what happens when a charismatic narrative can be worth more than a working assembly line. SPACs became the vehicle of choice. Raise billions first, build later, let the PowerPoint carry the share price while the factories remain imaginary. Meanwhile, Ford kept doing the unglamorous work, maintaining stamping dies, negotiating with steel suppliers, recalls, warranty claims, union talks. the gritty, unedited side of capitalism that rarely makes it into an investor sizzle reel, but quietly pays the bills. Pattern interrupt. If you had to hold one side of that split screen for the next 20 years, with no selling, no trading, no escape clause, which would it be? The roaring presses, the truck lots, the messy but real cash flow, or the promises, prototypes, and a story that, at times inspiring and at times chilling, lived mostly in renderings and earnings calls? Keep that question hanging in your mind, because the next part of this story shows what happened when reality finally walked onto that glossy PowerPoint stage. Reality did walk onto that stage, but it wasn't a truck rolling off an assembly line. It was a shell company with a war chest. There was a time when 3 little letters could turn a PowerPoint dream into a Wall Street empire almost overnight. SPAC, Special Purpose Acquisition Company. A pile of money with no business, no product, just a promise to find one on. Vecto IQ was one of those piles. Run by Steve Gursky, a former GM vice chairman, it raised cash from investors first, then went hunting for a private company to merge with later. That merger would be the backdoor IPO, a way into the public markets with faster timelines and lighter scrutiny than a traditional listing. Let me take you back to early 2020. While most of the world was bracing for a pandemic recession, the SPAC boom was quietly loading the cannon. Vecto IQ announced it had found its target, Nikola Motor Company. In an instant, a risky private startup with prototypes and renderings became something else entirely. It became a ticker symbol, NKLA, a next Tesla story that anyone with a brokerage app could tap with their thumb. Because of that single press release, the narrative shifted. This was no longer just Trevor Milton convincing a handful of venture funds in quiet conference rooms. This was Robinhood traders, ESG-themed funds, and momentum chasers all staring at the same green line on the same chart. The merger framed Nikola as clean energy, zero-emission trucking, a way to save the planet and get rich doing it. It was an example of what happens when technology hype, cheap money, and a new Wall Street toy collide at the perfect moment. Once the deal was announced, the frenzy arrived fast. NKLA rocketed up the most traded lists on platforms like Robinhood. Social media feeds filled with screenshots and victory laps. Influencers called it the future of trucking, the next great American empire of hydrogen, the chance to buy the Tesla of semis before the world caught on. Financial media, hungry for a feel-good green tech story, amplified every spike and every sound bite. Underneath the noise, one quiet document did a lot of heavy lifting, the SPAC deck. In traditional IPOs, companies are tightly limited in how they talk about future revenue and profits. SPACs lived in a gray zone. Their glossy slides showed revenue curves that went vertical, fat margins arriving almost overnight, multi-billion-dollar contracts penciled in as if the money was already in the bank. These projections weren't audited like a prospectus, yet they took on the weight of official prophecy. For many investors, they became the story. And then, once NKLA shares actually started trading, that story turned into numbers no one expected. Within days, Nikola's valuation would surge past century-old giants like Ford. On paper, the company with no real truck was suddenly worth more than the company that had put the world on wheels. At the center of it all stood Trevor Milton, a salesman from Utah who, for a brief and surreal moment, woke up a billionaire on screen while the factories to justify that wealth still existed mostly in renderings and dreams. There was a time when a pre-revenue truck company with no real product on the road woke up worth more than the firm that invented the moving assembly line. Not in a simulation, not in some distant future. In June 2020, on Wall Street screens, it was happening live. Let me take you back to the days right after Nikola's SPAC merger with VectoIQ close. The ticker changed to NKLA, the float was thin, and the story was intoxicating. On June 4th, the first trading day under the new symbol, shares jumped. Then they kept jumping. Momentum traders piled in, options volume exploded, and every green candle on the chart pulled in another wave of believers. This was the SPAC boom at full throttle, where a slide deck could feel more powerful than a factory. Within a week, the numbers turned surreal. NKLA ripped past $60, then $70, then briefly above $90 intraday. On paper, that meant a market cap north of $30 billion, enough to edge past Ford Motor Company, which was grinding through a pandemic, still producing millions of vehicles and over $150 billion in annual revenue. One company shipped no trucks. The other had spent a century putting families, freight, and entire economies on wheels. The money pouring into Nikola was following a story, not a balance sheet. This was the clean energy revolution, the promised disruption of diesel trucking. The idea that hydrogen and batteries would erase emissions and rewrite the physics of freight. ESG funds needed symbols of the future. Retail traders wanted the next Tesla-like rocket ship. Analysts spoke of an empire of zero-emission semis, hydrogen corridors across continents, and software subscriptions wrapped around every mile. Meanwhile, Ford's reality looked painfully uncinematic. Cyclical earnings, legacy pension obligations, union negotiations, warranty costs, the unglamorous grind of stamping steel, managing suppliers, recalling flawed parts, and squeezing single-digit margins out of physical products built at staggering scale. Ford was fighting for survival in a brutal industry. Nikola was fighting for attention on social media and winning. Because of that contrast, the market's judgment took on an almost moral tone. To many, backing Nikola meant backing the planet, backing progress, backing a life beyond oil. Backing Ford meant backing the past. The fact that Ford had found ways to stay alive through wars, recessions, oil shocks, and shifting consumer tastes suddenly looked less exciting than a CGI rendering of a hydrogen refueling station glowing under desert stars. His story is one of how narrative can overpower numbers, at times inspiring and at times chilling. For a brief moment, the salesman's dream outranked the manufacturer's reality, and the crowd crowned Nikola the future with billions in wealth. But while traders celebrated a $30 billion vision, almost no one stopped to ask how thin the ice under that valuation really was, or how violently it was about to crack in the months ahead. The ice held because people believed in the man standing on it. Not only did Nikola have a $30 billion valuation, it had something even more powerful in this market. A founder who looked and sounded like the next Elon Musk. On Twitter and in interviews, Trevor Milton projected pure certainty. Aggressive timelines, bold promises, direct replies to critics and fans, all delivered with the casual confidence of someone who claimed to see 10 years ahead. There was a time when a CEO might have stayed quiet until the factory was humming. Trevor did the opposite, lived tweeting the future before the present had even been built. He talked about hydrogen at under $4 a kilogram, about proprietary in-house battery breakthroughs that would change energy density forever, about trucks and fueling networks that were, according to him, essentially ready to go. When skeptics questioned how Nikola could match or beat incumbents on cost, he didn't hedge. He doubled down, insisting that traditional players were too slow, too complacent, trapped in an old empire of diesel and delay. In conference halls and glossy TV segments, he cast himself as the visionary who understood trucking as an integrated life system. vehicles, infrastructure, software, all wrapped into one grand design. Let me take you back to those clips. Stage lights, a concept truck, a giant screen showing clean highways and glowing hydrogen stations. Trevor paced like a preacher of technology, explaining that he had seen this future long before the industry, that Nikola's role was not just to sell trucks, but to rewrite the energy map. The modern market loves that story. Over the last decade, investors have turned founder CEOs into near mythic figures, treating charisma as a form of collateral. Because of this cult, confidence and storytelling can outweigh balance sheets, production numbers, even basic engineering. His story is one of a salesman stepping into that vacuum, offering a narrative of disruption so vivid that many forgot to ask whether the numbers behind it were real. Consider some of the lines that later came back as evidence. Claims that Nikola had designed its own revolutionary battery tech, when in reality there was no such finished product. Statements that the Nikola 1 was fully functional, even as internal emails showed it needed gravity and a hill to drive. Assurances that hydrogen costs were locked in at levels even major energy firms struggled to believe. Each quote nudged the share price higher, each exaggeration quietly converted into money and power. Then a pattern interrupted. This wasn't the first time a charismatic founder rode a wave of adulation. There was a blood-testing prodigy promising lab-grade results from a single drop, a shared office visionary selling a lifestyle empire instead of a lease, a parade of geniuses whose confidence ratings outpaced their audited results. At times inspiring and at times chilling, it's an example of what happens when markets confuse performance on stage with performance in the factory. And yet, despite those recent manias, investors crowded back around Nikola, convinced that this time the visionary really had the goods. The question was how long that spell could last once someone started checking the claims line by line. So to keep that spell alive, Nikola needed more than a truck. It needed an entire world built around that truck. Not only a new vehicle, but a new fuel, a new network, a new empire of energy and logistics that would make diesel look like a relic from a dirtier age. There was a time when Trevor Milton spoke about this hydrogen future as if it were already here. The plan sounded disarmingly simple. Nikola would lease its fuel cell trucks to fleets for a flat price per mile, and that number would quietly include the cost of hydrogen fuel. No messy gas receipts, no volatile energy markets, just a clean subscription to the future. Predictable recurring revenue for Nikola, predictable operating costs for customers. On paper, it looked like the holy grail of trucking. To make that work, Trevor promised a nationwide web of hydrogen stations, hundreds of them, marching along the major freight corridors. Each station would produce hydrogen on-site, feed it into high-pressure tanks, and keep Nikola's trucks moving day and night. Investor decks showed gleaming renderings of futuristic depots, trucks lined up under blue-tinted canopies, everything spotless, silent, efficient. It felt less like a business plan and more like a new religion of transport. But the real magic trick was the price. Trevor repeatedly claimed Nikola could make hydrogen for around $3 a kilogram, then hinted at numbers even lower. That would undercut diesel on a per-mile basis and flip the economics of heavy trucking. Suddenly, zero emission didn't just mean cleaner air. It meant more money in the bank. For investors chasing ESG dreams and financial returns, that combination was at times inspiring and at times chilling. Industry experts, though, knew how hard that promise really was. Hydrogen is not a fuel that appears out of thin air. It has to be made, usually by splitting natural gas or water, which requires massive energy, expensive electrolyzers or reformers, and then compression, storage, and transport in tanks that can safely hold a tiny molecule that loves to leak. Every step costs money, every step loses efficiency, every step adds risk. Hitting Trevor's numbers at scale would have required breakthroughs in power prices, equipment costs, and construction timelines that simply did not exist. Yet, when investors opened Nikola's presentations, they didn't see spreadsheets of thermodynamics. They saw glossy maps, dots spread across North America, then Europe, then the world, as if someone had taken a highlighter to every major highway and written Nikola on top. It created a sense of inevitability, of a network so far along that the only rational move was to join before it was finished. Let me take you back to those months in 2020 when that vision was everywhere, because those hydrogen dreams would not just hypnotize retail traders on Robinhood. They would reach deep into the halls of one of America's most famous manufacturers. General Motors was watching. General Motors was watching, but it wasn't alone. There was a time when almost every powerful institution on Wall Street was staring at Nikola's soaring chart and seeing not danger, but destiny. Reports poured out from big-name banks, dressed in precise models and neat tables, projecting billions in future revenue from hydrogen trucks, stations, and battery systems that did not yet exist outside of prototypes and PowerPoint. They took Trevor Milton's timelines, multiplied them by aggressive adoption curves, then slapped on software-like margins. Little sensitivity to execution risk, almost no allowance for delays, permitting battles, or the brutal reality of building an energy network from nothing. A few scenario analyses appeared in the footnotes, but the headline numbers shouted something else. This could be the next Tesla. This could be a once-in-a-generation empire of clean transport. This could turn today's money into life-changing wealth. On financial TV, the rhythm was even faster. Hosts marveled at how Nikola was worth more than Ford with no real truck on the road, then pivoted straight into Trevor's talking points about hydrogen at $3 a kilo, a nationwide station rollout, and battery breakthroughs that would leapfrog the industry. The tone was breathless, the questions gentle. Very few segments brought on fuel cell engineers or grid experts to ask the boring, ruthless questions about thermodynamics, capex, and maintenance. Articles in major outlets repeated the same phrases: game-changing, disruptive, first mover. Charts of falling hydrogen costs appeared with small citations to Nikola's own investor deck. It's an example of what happens when a compelling story meets a hungry news cycle. The more the price ran, the more the coverage framed it as inevitable, at times inspiring and at times chilling in how completely the optimism drowned out doubt. Behind the scenes, incentives lined up with eerie precision. Investment banks saw a SPAC that could generate fat advisory fees, warrant gains, and future follow-on offerings. Analysts, paid to find upside, knew that a bullish target on the next Tesla drew more calls, more clients, more attention. Media outlets watched Nikola headlines drive clicks during a lockdown bull market where everyone, from bored college kids to retired grandparents, was trading on their phones. And the few skeptics, short sellers who pointed out the rolling downhill truck video, the reused inverters, the vague answers on hydrogen sourcing, were labeled haters, dinosaurs who didn't get disruption. Their reports were waved away on air as negativity, as an attack on innovation itself. For a moment, it looked like the market had abolished gravity by consensus. Let me take you back to those days, when Nikola's valuation brushed $30 billion, and Ford, with its factories, its family history, and its actual vehicles, was treated like the one that didn't understand the future. His story is one of how narrative can overpower numbers, how wealth can appear before the product. In that vacuum of real due diligence, the entrance of a legacy giant would mean everything. Because into this echo chamber of belief, a name stepped forward that that seemed to silence every lingering doubt. General Motors was not just watching, it was about to sign on. There was a time when one headline could rewrite a company's entire life. On September 8th, 2020, that headline landed, General Motors and Nikola, strategic partnership, $2 billion equity stake. Overnight, the mirage looked like an empire. The terms sounded simple and brilliant. GM would receive newly issued Nikola shares, initially valued around $2 billion, in exchange for building Nikola's Badger pickup, supplying batteries and fuel cells, and giving Nikola access to GM's Ultium and Hydrotech technology. On paper, the grizzled Detroit veteran would handle the metal, the engineering, the factories. The upstart would bring the brand, the hydrogen dream, the soaring valuation. Together, they would conquer the future of trucks. To a market drunk on momentum, it felt like the ultimate validation. If GM's engineers had opened the hood and still said yes, then the tech must be real. If GM's lawyers, famous for caution and scar tissue, had combed through Nikola's claims and still signed, then the risk must be manageable. This wasn't just Trevor Milton talking anymore. This was a century-old automaker staking money, reputation, and time on the vision. The reaction was immediate. NKLA shares spiked again in pre-market trading, then surged as commentators called the deal a win-win. Analysts talked about how Nikola had just outsourced its hardest problems to a giant that knew how to build millions of vehicles a year. TV hosts marveled that a company with no real truck had convinced GM to do the heavy lifting. Trevor went on air and framed it as proof that Nikola had finally arrived, that legacy power was now bending around his story. Because of that announcement, lingering doubts were steamrolled. Short sellers suddenly looked reckless. Retail investors felt vindicated. It's an example of what happens when a single blue-chip logo can drown out months of quiet technical questions about hydrogen costs, supply chains, and whether a prototype had really driven under its own power. But GM wasn't doing charity. GM saw access to hype, a shortcut into the EV truck conversation without having to play the influencer game itself. By plugging Ultium batteries and Hydrotech fuel cells into Nikola-branded vehicles, it could monetize technology it had already sunk billions into, while Nikola carried the role of visionary and lightning rod. If Nikola soared, GM's stake could be worth far more than $2 billion. If Nikola crashed, GM would, in theory, still own its factories, its patents, its cash. Then comes the pattern interrupt. What if the story everyone told was backwards? What if GM wasn't really validating Nikola, but Nikola was using GM as a prop in a much bigger illusion, borrowing a century of credibility for a few weeks of euphoria? Let me take you back to the days immediately after that handshake. When the market cheered, the headlines glowed, and one quiet researcher began preparing a report that would turn this win-win into something at times inspiring and at times chilling. There was a time when Nikola looked untouchable. The GM deal had wrapped the company in old-line Detroit credibility. The market cap hovered in the tens of billions, and critics were dismissed as jealous or not getting it. Then a small New York short-selling firm stepped forward and calmly lit a match. Hindenburg Research was not a household name, but in the world of Wall Street, it had a reputation. This was a group that made money by betting against companies, then publishing deep-dive investigations on those they believed were fraudulent or wildly overhyped. Not meme stock trolls, but forensic accountants with subpoenas on speed dial. Their life's work was digging through filings, emails, photos, and forgotten websites to see whether the empire CEOs described actually existed. On September 10, 2020, Hindenburg released a report with a title that felt more like a verdict than a question. Nikola, How to Parlay an Ocean of Lies into a Partnership with the Largest Auto OEM in America. In page after page, they alleged that Nikola and Trevor Milton had made dozens of false statements about its technology, its progress, even its most iconic video. The glossy clip of the Nikola 1 majestically cruising down a desert highway. Hindenburg said the truck had no working drivetrain. It had been towed up a hill, positioned just right, and then simply rolled down under gravity. That was only the opening shot. The report claimed Nikola had wildly exaggerated its hydrogen technology, bragging about breakthroughs in production costs and infrastructure that did not exist. It accused the company of presenting off-the-shelf components as proprietary innovations, of talking about in-house battery and fuel cell miracles, while quietly relying on outside suppliers. Partnerships that sounded like ironclad endorsements from industrial giants, Hindenburg argued, were often early-stage MOUs, marketing collaborations, or deals far less concrete than the press releases implied. What made the document so devastating was not just the tone, but the receipts. Hindenburg embedded emails from former employees, internal photos of incomplete prototypes, archived versions of Nikola's own website that contradicted later claims. Whistleblower accounts painted a story of a charismatic founder who treated engineering like theater, timelines like fiction, and press conferences like weapons. His story is one of how confidence, when supercharged by a bubble, can look at times inspiring and at times chilling. The market reaction was immediate and brutal. NKLA shares plunged double digits within hours. Trading was halted as investors tried to process whether they were holding the future of clean trucking or a very expensive mirage. Commentators who had once praised Milton's vision now replayed the rolling truck video with a different tone, pointing out the suspiciously absent exhaust note and the gentle, downhill slope. Overnight, the narrative flipped from unquestioning hype to urgent skepticism. Because of Hindenburg's report, regulators began circling, journalists sharpened their questions, and even friendly partners were forced to reconsider what they had signed. It's an example of what happens when a market built on momentum suddenly demands proof instead of promises. For the first time, the world had to ask itself a ruthless question. Was Nikola truly a visionary clean tech company, or just a $30 billion mirage crafted by a master salesman? And what would happen when the illusion finally met reality? The illusion did not vanish overnight. It fought back. Within hours of the Hindenburg report dropping, Nikola went on the offensive, calling the allegations false and misleading, accusing the short seller of market manipulation, and promising a line-by-line rebuttal that they hinted would expose the real villains, greedy traders attacking a visionary clean tech empire. There was a time when that kind of counterattack alone could steady a wobbling stock. Blame the shorts, question their motives, reassure the faithful. Nikola's statement framed Hindenburg as a ruthless hitman for Wall Street, out to destroy a mission-driven company that only wanted to save the planet and make trucking clean. Money, they implied, was on one side, truth and innovation on the other. Then the rebuttal arrived. On paper, it looked confident, point after point, carefully numbered, formally worded. But as investors read past the headline, something curious appeared. The company was not really saying, "This never happened." It was saying, "We never used those exact words." Take the infamous video of the Nikola 1 in motion. Hindenburg said the truck was not driving under its own power. It was rolled down a hill. Nikola did not deny the hill. Instead, the company argued that it had never explicitly claimed the vehicle was driving under its own propulsion, only that it was in motion. The truck moved, the road was real, the camera rolled. Technically correct, economically meaningless. The pattern repeated. Where Trevor had talked about producing hydrogen at or below certain ultra-low costs, the rebuttal leaned on theoretical models and future plans. Where presentations had implied in-house battery breakthroughs, the defense pointed to partnerships and exploratory work. His story is one of grand, sweeping promises on stage, followed by narrow, legalistic footnotes when the lights turned harsh. For the average investor watching glossy videos, seeing a gleaming semi glide across the screen, hearing a founder say the prototypes were fully functioning, the impression was simple. The tech worked. This was not a science project. This was the future already here. It's an example of what happens when the language of marketing collides with the language of securities law. Regulators and sophisticated investors live in that collision zone. They are trained to look past word games to the economic reality, what was implied, what people reasonably believed, and how that belief moved billions of dollars. If a truck needs gravity instead of a drivetrain, if built means rendered, if ready means one day, the law tends to care less about the adverbs and more about the capital that changed hands. Let me take you back to that frantic week. Publicly, Nikola projected control, insisting the report was a hit job and that partners like GM remained confident. Privately, pressure was mounting. Regulators began asking questions. Institutional investors demanded documents. Board members quietly hired their own counsel. The empire that had once been worth more than Ford now faced a different kind of test, one that marketing could not easily smooth over. And as those internal doubts sharpened, someone inside Nikola was about to make a decision that would change the company's life forever. That decision landed on September 20th, 2020. Just 10 days after Hindenburg called Nikola an intricate fraud, the company announced that Trevor Milton, the man who had built the empire with tweets, keynotes, and promises, was stepping down as executive chairman. Not after a long internal review, not after regulators finished their work, overnight. The official story was calm, almost serene. Trevor said he had asked the board to let him go. He framed it as an act of sacrifice, a move made in the best interest of the company and its shareholders. There was a time when his life and Nikola's were treated as the same story. Now, in a few paragraphs, that bond was publicly severed. He still insisted he believed in Nikola's vision. He denied wrongdoing. He thanked the team like a departing founder at a successful exit, not a leader under siege. Markets heard something very different. Because of the timing, because of the pressure, because of the money on the line, investors read his resignation as a confession written between the lines. Nikola's shares, already falling after the report, dropped again in pre-market trading, then slid further as the day went on. Questions multiplied faster than answers. Who would lead the company? What did Trevor know that the board had just seen? If the founder had truly done nothing wrong, why leave now? Inside Nikola, executives tried to project continuity. The new chairman emphasized engineering, process, governance. Conference calls filled with phrases like execution focus and long-term value creation. On paper, it sounded responsible. On screen, it felt hollow. The empire that had once been worth more than Ford now had spreadsheets, committees, and risk frameworks. What it no longer had was the charismatic salesman who could stand on stage and, with a few sentences, make billions in wealth appear. Let me take you back to the earlier months of 2020. Back then, Trevor's Twitter feed moved the stock. His interviews moved retail investors. His story was one of rags to riches hustle, at times inspiring and at times chilling in its disregard for technical detail. When he vanished from the front of the parade, the psychological spell broke. The truck had been rolling downhill. Suddenly, everyone wanted to see the engine. Here's the pattern interrupt. Zoom out from Nikola, and the picture looks eerily familiar. WeWork pushed out Adam Neumann. Theranos removed Elizabeth Holmes from the CEO role. Each time, boards hoped that by deleting the face, they could disinfect the story. But what happens when the narrative itself is the problem, when the wealth, the power, the valuation were built on illusions rather than machines? Trevor's fall marked Nikola's entry into a post-founder era. The question now was brutal and simple. Without its storyteller, was there anything real left to tell? Without its storyteller, the empire had to stand on its own. In late November 2020, the market got its answer, and it was brutal. There was a time when the Nikola GM deal was held up as the adult in the room, the moment Legacy Detroit blessed this shiny hydrogen dream. Back in September, headlines screamed about a strategic partnership. GM would take an equity stake worth up to $2 billion, engineer and build Nikola's Badger pickup, and supply batteries and fuel cells. It sounded like validation, money, and manufacturing muscle all rolled into one. For a brief moment, it made Nikola look less like a story and more like a company. Then the Hindenburg report landed, Trevor resigned, and the glow curdled into risk. Let me take you back to November 30th, 2020, when GM finally stepped up to the microphone with an update. The new announcement was not a victory lap, it was a retreat. Under the renegotiated agreement, GM would take no equity stake at all. Zero. The $2 billion headline vanished. The much-hyped Badger program, the electric hydrogen pickup that retail investors had plastered all over social media, was dead on arrival. GM would not design it, would not build it, would not touch it. Nikola quietly announced it would refund Badger reservation holders, a small line item on the balance sheet, but a huge hole in the narrative. What remained was a thin, careful framework. GM and Nikola had signed a non-binding memorandum of understanding to explore a potential deal for GM to supply fuel cell systems for Nikola's heavy trucks. Not guaranteed supply, not joint development, not shared ownership, just a promise to keep talking. For a partnership once sold as transformational, this was the corporate equivalent of let's stay friends. Because of this sudden shift, the market saw something that press releases tried to soften. If GM, with its engineers, lawyers, and risk committees, no longer wanted a piece of Nikola's upside, what did that say about the tech, the business case, the future? This was not a short seller on Twitter. This was a century-old car empire stepping back from the edge and carefully folding its checkbook. Nikola's credibility had been rented from others, from Trevor's charisma, from SPAC bankers, from the GM logo splashed across investor decks. When GM pulled its equity and killed the Badger, that rented credibility evaporated. The stock plunged again. The paper wealth that once rivaled Ford's shrank, and the story that had lifted Nikola out of near poverty and into global headlines began to look, at times inspiring, and at times chilling, like a cautionary tale. It's an example of what happens when the validation disappears before the products arrive. Partners were backing away, investors were recalculating, and the empire of promises was shrinking fast. But as the market marked down the dream, another force was preparing to mark something else: intent. While shareholders argued over valuation, federal prosecutors and securities regulators were quietly circling, ready to ask a much harsher question about how this story had been sold. This was the moment when the YouTube videos and press releases stopped being entertainment and started becoming evidence. Not only were analysts replaying Trevor's interviews frame by frame, federal agents were too. Within days of the Hindenburg report, the SEC opened a formal inquiry. The Department of Justice followed, moving from quiet interest to active investigation. Because if Nikola's story had been sold with what prosecutors call a scheme to defraud, then this wasn't just a PR disaster. It was a potential crime scene built out of earnings calls, tweets, and glossy promo clips of a truck rolling down a hill. Let me take you back to that shift in tone. There was a time when Nikola's filings were read mainly by excitable traders and ESG funds hunting the next green empire. Now those same documents were being requested under subpoena. Email archives, Slack messages, board minutes, engineering reports, internal projections, even raw footage from marketing shoots. Regulators wanted to see what executives said in private on the same days they were promising the future of trucking in public. The SEC's job was methodical, and to anyone inside the company, quietly terrifying. Staff attorneys would line up Trevor's claims about fully functioning prototypes, hydrogen costs, and in-house battery breakthroughs against internal slide decks showing supplier dependence, technical delays, and, in one now famous case, a disabled truck towed up a grade. It's an example of what happens when the gap between narrative and reality becomes wide enough to drive a semi through. The DOJ's interest raised the stakes even higher. Securities fraud and wire fraud charges require more than exaggeration. They require a pattern of materially false statements tied to the flow of money. So investigators traced investor calls, SPAC roadshows, and media appearances, then followed the capital. Billions in market value created as Trevor's words moved the stock. Hundreds of millions raised from investors who believed they were funding a revolution, not a prototype that needed gravity to drive. Publicly, Nikola struck a cooperative pose. The company announced it was working with regulators, handed over documents, and quietly began setting aside reserves for potential settlements. On earnings calls, new leaders stressed governance, controls, a fresh chapter. Yet, between the lines, a darker realization was spreading through the shareholder base. If prosecutors concluded that investors had been misled, this wasn't just about fines, it was about handcuffs. His story is one of meteoric wealth built on promises that, at times inspiring and at times chilling, now read like a future indictment. As Nikola tried to distance the brand from its founder, stripping his face from decks and his quotes from the website, investigators were doing the opposite. They were isolating him. While the company fought for survival, federal prosecutors were narrowing their focus to the man whose voice had once added billions in a single interview, and who was about to find out what happens when that same voice is replayed in a courtroom under oath. So when the cameras finally turned from the truck to the man, the tone changed. This was no longer a story about a fallen startup. It was the United States of America versus Trevor Milton, the storyteller who had once moved billions with a tweet. In July 2021, a federal grand jury in Manhattan handed down an indictment that read like a highlight reel of his greatest hits, stripped of the music. 3 counts at first, later 4. Securities fraud, wire fraud, each charge tied to moments when he had stepped on stage, or opened his phone and told the world what Nikola supposedly had. The government's message was blunt. There was a time when markets might shrug at exaggeration, but this went further. Prosecutors said his story is one of lies told in a bull market that wanted to believe. According to them, Milton used social media, glossy TV interviews, podcast appearances, and flashy presentations to paint Nikola as a clean energy empire years ahead of reality. Because of those statements, they argued, small investors bought, SPAC investors held, and the price of a company with no real truck soared past Ford, creating paper wealth that would later evaporate. The indictment zoomed in on specifics. Milton had claimed Nikola was building batteries in-house with breakthroughs that outperformed anything on the market. In reality, there was no such miracle battery line. He told audiences Nikola could produce hydrogen at around $3 per kilogram, undercutting the entire industry when the company had no functioning hydrogen production facilities. He described the Nikola 1 as fully functioning and ready for the road at its 2016 reveal, even though the prototype could not drive under its own power. It was an example of what happens when stagecraft replaces engineering, and the lights are bright enough that no one asked to look under the hood. Because of his ruthless commitment to the narrative, the government said Milton crossed a line. Their theory was simple. When a founder repeatedly makes concrete claims about present capabilities, about trucks that drive, batteries that exist, hydrogen that is cheap, knowing or recklessly ignoring that those claims are false, that is not optimism. That is securities fraud. And yet, let me take you back to the world around him. SPACs were minting overnight billionaires. Every deck promised world-changing tech. Forward-looking statements wrapped almost any dream in legal armor. So here is the pattern interrupt. Where is the line exactly between a bold vision and a criminal lie in an age when every startup promises to save the planet and make investors rich at the same time? Milton's case carried symbolic weight far beyond one man's life or money. He wasn't charged with cooking the company's books, fabricating fake revenue, or hiding losses. He was charged with weaponizing hype itself, with turning the same promotional energy Wall Street had rewarded into a tool of deception. And as the trial approached, another question hung in the air. If this was fraud, what would that make of the rest of the boom? There was a time when Trevor Milton's words could move billions of dollars with a single tweet. In a Manhattan courtroom, those same words were frozen on screens, slowed down, replayed, and dissected syllable by syllable. The empire he'd built out of language was finally being measured against reality, under oath. The prosecution strategy was ruthless. They did not start with complex equations or obscure accounting tricks. They started with Milton's own highlight reel, CNBC clips, where he promised a fully functioning hydrogen semi, conference keynotes, where he said Nikola had all the parts on hand, tweets announcing that Nikola was producing hydrogen at scale. Then they paired each claim with emails, engineering reports, and internal timelines that told a much smaller, far less glamorous story. It was an example of what happens when the myth of disruption collides with the minutes of a board meeting. Jurors watched the famous truck video, the one that helped propel Nikola's value past Ford. On the big screen, it looked heroic, a futuristic machine gliding down a desert road. Then prosecutors called a former employee who explained in calm, almost bored tones that the truck had no working drivetrain. The team had to tow it up a hill and let gravity do the rest. Same road, same truck, same life-changing market reaction, completely different source of power. Witness after witness filled in the gap between the story and the shop floor. Engineers described hydrogen stations that did not exist, battery technology that was still on whiteboards, fuel, cell systems that had never powered a loaded semi for meaningful distance. A supply chain executive testified that key components were still being sourced from third parties, while Milton spoke publicly as if Nikola had mastered everything in-house. Because of those contrasts, the narrative of a ready-to-dominate trucking empire began to look at times inspiring and at times chilling. Experts translated the hype into securities law. They explained what material misstatement means, how a reasonable investor might hear, "We have a working prototype," not as a dream, but as a fact. They walked the jury through market reactions, spikes in share price after specific interviews, surges in trading volume after bold promises about hydrogen costs undercutting diesel. Words, then price moves, then more words. A feedback loop of money and belief. The defense pushed back hard. Milton, they argued, was not a con artist, but a salesman in the classic Silicon Valley mold, talking about where Nikola was headed, not where it stood that exact Tuesday afternoon. They pointed to the culture of tech, where founders say, "We're building and we've built," almost interchangeably, where ambitious roadmaps are spoken of as if they're already on the factory floor. His story is one of optimism, they insisted, not fraud. That left the jury with a narrow, brutal question. When does optimism become a lie? At what point does "we're going to revolutionize trucking" turn into a statement that unlawfully misleads investors about present reality? Their verdict in 2022 would not just decide Milton's fate. It would send a chilling message to every founder who thought words were weightless. And the market was about to find out what that message was. The market finally answered that question in the harshest way it can, with a guilty verdict. In October 2022, a federal jury in Manhattan convicted Trevor Milton on multiple counts of securities and wire fraud. Not a wrist slap from regulators, not a quiet settlement with no admission of wrongdoing. A criminal judgment. The man whose words had once added tens of billions of dollars in paper wealth to Nikola's value now faced the possibility of losing his freedom because of those same words. There was a time when Milton's exaggerations were treated as entertainment, as just another charismatic founder talking up a dream. In court, that image was stripped away. Prosecutors described a pattern: claims about hydrogen production costs, about in-house battery breakthroughs, about trucks fully functional, when they were not. They argued these were not harmless flourishes, but calculated misrepresentations designed to drag more money into the empire he was trying to build. Each tweet, each TV hit, each glossy presentation became another brick in a case that investors had been misled on the most fundamental question of all: what was real? The judge's framing was blunt. This was not about punishing optimism. This was about lies that moved markets and emptied bank accounts. Jurors heard from retail investors who had poured life savings into Nikola, from funds that had chased the ESG wave, from people who believed that buying the stock was buying into a cleaner future. When Nikola's illusion unraveled, some lost college funds, retirement money, even homes. Because of his ruthless use of hype, prosecutors said, Milton didn't just bend the truth, he monetized it. Let me take you back to the atmosphere around sentencing. Federal fraud convictions carry serious potential penalties: years in prison, supervised release, millions in fines, forfeiture. This was the same legal toolkit used on insider traders and Ponzi schemers, not a parking ticket for sloppy PR. The message was clear. If a founder uses the public markets like a personal casino, the House can and will push back. His story is one of at times inspiring and at times chilling ambition. A farm kid turned salesman who talked his way from relative poverty into staggering paper wealth, then from primetime interviews into a courtroom. It's an example of what happens when the culture of fake it till you make it runs headfirst into a jury of ordinary people who do not live on venture timelines. Founders watching from the sidelines suddenly had to ask, how far can the story go before it becomes evidence? And investors felt the chill too. Grandiose promises, glossy hydrogen animations, press releases about trillion-dollar markets. All of it started to look less like vision and more like risk. Yet, while Milton waited to learn how many years his words might cost him, something strange was happening back at Nikola's headquarters. The company he'd built on narrative alone was still there, battered but alive, trying to prove there was finally something real under the hood. And that's where the story turns next. When the smoke cleared, Trevor was out, the indictment was in, and what remained at Nikola looked less like a visionary empire and more like a crime scene. Yet the board made a choice that surprised many on Wall Street. They did not shut the doors. They tried to reboot the story. There was a time when Nikola's brand was Trevor himself, pacing stages, promising hydrogen highways and trillion-dollar markets. After he left in 2020, leadership swung hard in the opposite direction. In came Mark Russell, then Michael Loscheller, managers who spoke in spreadsheets, not sermons. The new message was almost painfully sober. Focus on execution, cut the hype, talk about kilowatt hours and delivery schedules instead of destiny and disruption. Press releases shrank, timelines stretched. The life of the party had been escorted out, and the adults were now checking the bill. Underneath the ashes, there were programs that actually existed. The battery electric tray, built on an Iveco platform, rolled through a real factory in Coolidge, Arizona. Nikola still had a hydrogen fuel cell version on the drawing board, plus a skeletal network of hydrogen station plans and a few energy partnerships that hadn't run for the exits. Bosch remained tied in on fuel cell components. Iveco stayed involved, even after taking some painful write-downs. For a company mocked for a truck that needed a hill to move, the irony was sharp. The least glamorous, most conventional project, a BEV truck using other people's technology, became the core of whatever was left. But money tells the truth. Against those old SPAC slides bragging about tens of thousands of units and billions in revenue by mid-decade, the real numbers were almost quiet. In 2021, Nikola delivered only a handful of BEV trucks and generated revenue that looked tiny next to its one-time $30 billion valuation. 2022 and 2023 brought more trucks out the door, tens and then low hundreds, with revenue climbing into the low hundreds of millions, but losses still in the hundreds of millions as well. Not only was it nowhere near Ford, it was struggling to look like a healthy mid-tier manufacturer. So was there a real business buried under the exaggerations, or was the whole thing fundamentally misaligned from birth? On one hand, the market for zero-emission heavy trucks is real. The need for hydrogen in certain routes is real, and Nikola did eventually put working vehicles on the road. On the other hand, the company had hired a salesman, not an engineer, to define its DNA. That early choice pulled everything toward headlines, away from hard engineering culture, away from the slow, ruthless discipline needed to survive in trucking. Now, let me take you back to an alternate timeline for a moment. Imagine Nikola launches as a modest Arizona startup. No trillion-dollar language, no rolling downhill video, just a small team saying, we'll try to assemble BEV trucks with partners and maybe experiment with hydrogen later. Would anyone have wired them billions? Would GM have taken the calls? Probably not, and that, at times inspiring and at times chilling, is the point. It's an example of what happens when a market rewards the loudest dream more than the quietest prototype until reality walks in. Because as Nikola tried to live on reality alone, the question became whether capital, patience, and time would stay long enough to see if anything durable could finally be built. Capital, patience, time. Those were the things Nikola needed, Instead, what it attracted next was something far more volatile: millions of bored, locked-down traders with a brokerage app and a dream. There was a time when NKLA sat on the Robinhood top movers list like a badge of honor, a clean tech rocket ship that on paper could turn small savings into life-changing wealth. Let me take you back to the middle of 2020. The SPAC boom is in full frenzy. Stimulus checks have hit bank accounts, and TikTok clips are teaching high schoolers how to buy the dip between classes. Nikola merges with VectoIQ, appears in every ESG thread as the future of trucking, and within weeks the company with no mass-produced truck is worth more than Ford, the century-old empire of assembly lines and actual deliveries. Because of that dazzling headline, because of that intoxicating chart, money pours in from people who will never read a fuel cell patent. His story is one of thousands, but call him Daniel. Late 20s, first real job, a few thousand saved for the future. He watches Trevor Milton on CNBC talk about hydrogen corridors and zero-emission freight, sees the renderings of sleek white semis, and hears commentators compare Nikola to Tesla's early days. Daniel buys near the top, feeling both proud and a little breathless. This isn't gambling, he tells his family. This is investing in the planet. Then there is Maria, a nurse who worked double shifts through the pandemic. She scrolls through a forum where everyone insists hydrogen is the next trillion-dollar market, where screenshots of six-figure gains are posted like trophies. She does not have the time to model hydrogen production costs, to question how many kilograms per mile a long-haul truck would need, or to dissect a SPAC proxy statement written in dense legal code. She just sees a chance to turn years of hard work into a down payment on a home. When the Hindenburg report lands, when the driving truck is revealed as a downhill roll, when analysts finally start asking why a supposed technology leader has to borrow other people's batteries, their screens turn from green to red. The insiders who receive shares at pennies can quietly sell into the spike. Strategic partners can renegotiate, hedge, or walk away. Retail holders like Danielle and Maria can only watch as their money evaporates day after day, with no special protections and no exit ramp. It's an example of what happens when complex risk is pushed onto people with the least ability to measure it. Hydrogen economics, fuel cell durability, SPAC incentives, lockup expirations. Each one is a graduate-level exam, and yet the final grade lands in the retirement accounts of teachers, nurses, and warehouse workers. At times inspiring and at times chilling, this is the modern market's favorite magic trick. And Nikola, for all its extremes, was not unique. The pattern is older than any one ticker: a seductive story, a parabolic chart, a wave of FOMO, and a long tail of quiet, unglamorous pain. Because after the fireworks fade, the question is never who rang the bell at the NASDAQ. It's who is left holding the bag when the music finally stops. Because for Nikola's rise to happen, it wasn't just one salesman on stage. It was an entire financial system behind the curtain, wired to cheer. There was a time when the biggest question on Wall Street wasn't, does this work? It was, can this get done? And the way the money flowed made that difference everything. Start with the SPAC. VectoIQ, Nikola's blank check partner, did not earn its payoff by building trucks. It earned it by closing a deal. Sponsors got a cheap promote, often around 20% of the post-merger equity, almost regardless of what happened years later. Banks arranging the merger collected advisory fees when the transaction closed, not when hydrogen actually flowed through a working fuel cell. Lawyers, accountants, PR teams all got paid on announcement day. The empire was made of term sheets and closing dinners, not torque and range. Then came the pipe investors, the supposedly smart money wiring hundreds of millions into Nikola at a set price. Their contracts often included discounts, warrants, and protections that softened the downside. If the stock spiked on hype, they could sell quickly and lock in gains. If it faltered, they still owned a favorable deal. The incentive was clear: move fast, secure allocation, ride the wave. Long-term execution was someone else's problem. Meanwhile, trading desks and hedge funds feasted on volatility. NKLA's chart looked like a seismograph, and every violent move meant spreads, options premiums, and short-term trades. A business with no real truck but wild price swings can be more profitable, day to day, than a dull, cash-generating manufacturer. It's an example of what happens when a story is more valuable as a casino chip than as a claim on future cash flows. And there was prestige. Being in the next Tesla deal made bankers look visionary, made portfolio managers seem plugged into the future, made ESG funds feel like they were saving the planet while chasing wealth. Questioning the narrative risked losing clients, losing access, losing invitations to the next hot roadshow. At times inspiring and at times chilling, the social pressure did not reward the skeptic in the back row asking awkward questions about batteries and hydrogen costs, because the real risk could be passed downstream. Early SPAC sponsors, pipe funds, and momentum traders could sell into the frenzy. Index funds were forced buyers once Nikola joined benchmarks. Retail investors, chasing life-changing upside, often arrived last, holding shares long after the banks had collected their fees and moved on. His story is one of retail faith meeting institutional exit. So let me take you back to that moment when Nikola was worth more than Ford. The fees were paid, the reputations were burnished, the charts were thrilling. When nearly everyone in the chain makes money from the illusion, who is actually left to pull the fire alarm before the building fills with smoke? In that silence, another force rushed in to fill the room: ESG money. Environmental, social, and governance mandates were no longer niche talking points. They were marching orders. There was a time when pension funds, sovereign wealth funds, and giant asset managers all woke up and realized that trillions now had to be labeled sustainable, or risk looking like relics from a dirtier age. So let me take you back to the late 2010s and early 2020s, when every glossy pitch deck had a green slide, every conference had an impact panel, and new ESG funds were launched by the week. Regulators hinted, consultants advised, marketing teams promised. Capital had a new religion, and it needed saints. Hydrogen, zero-emission trucking, a bold plan to decarbonize freight? Nikola walked into that moment like it had been written into the script. On paper, the story was perfect. Hydrogen fuel cell trucks to clean up one of the dirtiest sectors in the economy, battery electric models for shorter routes, solar-powered production, even talk of a nationwide hydrogen network. Because of mandates and checklists, portfolio managers didn't just want this story, they needed it. A company like Nikola slotted neatly into ESG brochures, index methodologies, and net zero by 2050 roadmaps, regardless of whether the technology was ready or the business made sense. The problem was simple, and at times inspiring, and at times chilling. Real environmental impact is hard to measure, especially when a company has no commercial product, no scale, and no history. So the market did something easier. It measured promises. Slide decks became data. Future emissions reductions were treated like current achievements. The more dramatic the projection, the greener the halo. Because of this, ESG labels and inclusion in sustainable indices acted like a blessing from above. Once Nikola landed in those baskets, it gained automatic buyers, passive flows, and a sheen of legitimacy that had little to do with fundamentals and everything to do with box ticking. It was now part of an empire of green tickers, wrapped in language about responsibility and the future of life on the planet. Here is the pattern interrupt. While Nikola was floating on a $30 billion valuation with no real truck on the road, genuinely impactful but boring decarbonization businesses were grinding away in the background. Companies rebuilding transmission lines, upgrading insulation in low-income housing, optimizing freight logistics, or manufacturing unglamorous components that quietly cut energy use. They were improving the world. They were often profitable, and they struggled to get a fraction of the headlines or the money. It is an example of what happens when narrative outruns verification, when regulators, index providers, and asset managers reward the story of future impact more than the proof of present results. The market tilts toward the loudest claims, not the cleanest kilowatt. And Nikola, with its hydrogen dreams and cinematic videos, was built for that tilted world. The question is what happens when that world finally collides with reality, when the green slides have to match real engines, real emissions, and real miles driven. And when that collision came, it didn't happen in a glossy render or a viral clip. It happened in places like Dearborn and Louisville, in buildings that shake when presses stamp steel, where the air smells like coolant and hot metal, and the only thing that matters is whether the truck actually starts at 5 a.m. There was a time when Ford was the boring background character in this story. Old money, old power, a century-old empire of pickup trucks and plant gates. Behind that dull image sits a machine of terrifying complexity. Global supply chains that reach from lithium mines to semiconductor fabs, tens of thousands of parts arriving in sequence, contracts with thousands of suppliers that can snap if a single gasket is late. Every year, Ford negotiates with unions, navigates strikes, bargains over healthcare and pensions, and tries to keep a human workforce aligned with robots and software. It spends years on crash tests, emissions testing, durability cycles, and regulatory compliance in dozens of countries. One faulty bolt, one airbag that deploys at the wrong time, and the company is staring at recalls, lawsuits, and hearings on live television. Because of that brutal reality, the truck market is a knife fight fought on razor-thin margins. A modern pickup might sell for $60,000, but after paying for steel, chips, labor, warranty claims, dealers, and marketing, the profit per vehicle can feel painfully small. Reliability is everything. Fleets care about uptime, fuel cost, and resale value, not whether the CEO gave an inspiring TED Talk about the future. So Ford tests doors to slam hundreds of thousands of times. It runs engines until they fail in desert heat and Arctic cold. It obsesses over cents per part. Meanwhile, competitors like GM, Ram, and Toyota attack from every angle, cutting prices, launching new trims, and trying to peel away loyal customers one contractor at a time. Let me take you back to the launch of the F-150 Lightning. On paper, Ford had every advantage: a legendary nameplate, a nationwide dealer network, a century of experience. Yet even then, the EV transition felt like walking a tightrope over a pit full of burned capital. Billions for new battery plants, billions for retooling factories, billions more for software, charging networks, and recalls when early glitches appeared. Even for a giant, this shift was at times inspiring and at times chilling. Ford could not simply declare a hydrogen future. It had to drag millions of customers, thousands of suppliers, and an entire workforce through each incremental step. Nikola promised to skip all of that. No legacy plants, no entrenched unions, no messy past. Just a leap straight into a hydrogen-powered tomorrow. with minimal assets and maximum ambition. And for a moment, the market agreed that the leap was worth more than the grind, that the PowerPoint was worth more than the production line. It's an example of what happens when our desire for a clean, heroic story outweighs our respect for unglamorous execution, and that decision, uncomfortable as it is, set the stage for what came next. Because that decision wasn't just about Nikola, it was about us, about why a company with no real truck could, for a brief and surreal moment, be treated like the future of an entire industry. There was a time when a story with a clear hero and a looming villain was all it took to move millions. Clean tech founders learned that lesson fast. Cast diesel as the dragon, climate change as the apocalypse, and the hydrogen truck as the knight in shining armor. Give the hero a humble origin, a mission to save the world, and a ruthless fossil fuel empire to overthrow. And suddenly, it feels less like a stock and more like a cause. Investors didn't just see a ticker symbol. They saw a life's work condensed into a narrative. A visionary outsider, taking on the old guard, doing what timid incumbents wouldn't dare. His story is one of disruption, destiny, and deliverance. At times inspiring and at times chilling, because once a founder is framed as a world-saving figure, every doubt starts to look like betrayal. Layered on top of that is something even more primal, the lure of being early. Nikola's rise happened in a moment when SPACs were minting overnight fortunes, ESG funds were hoovering up anything green, and people were whispering that hydrogen was the next Tesla. To buy in was to prove that you could see the future before everyone else. Miss it, and you weren't just late. You were condemned to watch other people's wealth explode while you sat on the sidelines. That fear of missing out turns red flags into background noise. A truck rolling down a hill in a promo video, a balance sheet heavy on promises and light on assets. The market shrugged because the stock price was screaming a different message, and that's where social proof finishes the job. When a company's valuation rockets past Ford, when headlines celebrate a $30 billion clean tech champion, when a giant like GM announces a multi-billion-dollar partnership, it feels like the story has been fact-checked by reality itself. If the media loves it, if Wall Street loves it, if smart money loves it, who wants to be the one person in the room saying the emperor's truck has no engine? Behind all this sits the quiet accomplice: complexity. Hydrogen, fuel cells, proprietary battery chemistries, zero-emission corridors. These are not technologies most people can audit on a weekend. That information gap is a gift to a charismatic founder who speaks in confident, rapid-fire detail. The more confusing the engineering, the easier it is to hide behind it. So if Nikola is just one expression of these biases, our hunger for heroes, our craving for early wealth, our trust in big names, our blindness around complex tech, what does that say about the next wave of PowerPoint billionaires already forming on the horizon? There was a time when any company with a wild dream and an electric motor drawing could be called the next Tesla, and no one flinched. So before this story turns into a simple tale of villains and victims, the audience needs a hard reset. Not all crazy-sounding visions are scams. Let me take you back to the late 1990s. Amazon was a money-losing online bookstore with a CEO talking about everything, while the stock whipsawed violently. Analysts called it absurd, a bubble, a fantasy. Later, early Tesla looked just as fragile, burning cash, missing deadlines, and promising to replace an entire century of gasoline power with batteries that still caught fire in the press. On paper, both looked like disasters waiting to happen. Yet their story is one of transparent risk. Bezos wrote shareholder letters openly warning that profits might be years away. Tesla filed documents that detailed delays, production hell, and recalls. The numbers were ugly, but they were there, out in the open, line by line, for anyone to attack. Investors could see the wounds, not just the armor. Real builders also leave a trail of metal, not just PowerPoint. Early Amazon warehouses existed. Packages shipped. Customers received books, then CDs, then everything else. Early Tesla Roadsters broke down, yes, but they also drove, could be test-driven, could be torn apart by skeptical engineers. Competitors, journalists, and short sellers could poke, measure, and complain. That pain is evidence. Compare that to an empire of promises where the most impressive product is a glossy video. It's an example of what happens when the timeline runs backwards. The overpromiser gives precise dates, precise costs, precise performance numbers, then quietly fails to deliver anything you can actually kick, test, or crash. The real innovator does the opposite, vague on exact dates, cautious on guarantees, then slowly over-delivers in the only language that matters: working machines, paying customers, growing revenue. So here's a simple mental checklist for the next visionary founder offering to turn your money into instant wealth. First, is there a working product, even an ugly one, that independent people have used and abused? Second, is there credible third-party validation, regulators, industry partners, engineers with reputations on the line who have seen behind the curtain and still stayed? Third, watch the founder under real scrutiny. Do they answer hard questions directly, admit delays, acknowledge limits, or do they attack critics, shift stories, and add more buzzwords whenever the numbers get too precise? Because ambition is not the enemy here. Without it, there is no escape from poverty, no new industries, no uncomfortable breakthroughs that change daily life. The danger comes when ambition turns into theater, when a charismatic storyteller learns that markets will reward confidence far faster than they will check the math. So as the next wave of revolutionary companies lines up on the horizon, the lesson is not to run from every bold claim. The lesson is to separate the rare builders, at times inspiring and at times chilling in their drive, from the performers. And to see where Nikola really fit, the story now returns to the hill, the truck, and the video that fooled almost everyone. The hill and the video made for a perfect illusion, but the truth is, the warning signs were everywhere long before Nikola's empire of hype reached that moment. There was a time when anyone paying attention could have seen the cracks forming, if they were willing to look past the cinematic slow-motion shots and the soaring promises about money and power. Start with the most basic test of reality: independent technical validation. For years, Nikola announced hydrogen breakthroughs, battery revolutions, and a network of refueling stations that would blanket the continent. Yet no respected lab, no established engineering firm, no neutral testing agency ever published detailed third-party results showing a truck meeting those claims. Journalists were shown glossy prototypes, not data. Partners got decks, not dynamometer charts. When a company says it has solved problems that have defeated entire industries and no outside expert can confirm it, that is not ambition. That is a siren. Then came the famous rolling truck video. Let me take you back to that stretch of road in the Utah desert. The Nikola One appears, majestic, gliding down the highway under its own power. The music swells. The camera angles are careful, almost reverent. Only later would investigators reveal the simple trick. The road was on a gentle decline. The truck had been towed to the top and released. No working hydrogen drivetrain, No miracle battery, just gravity and good cinematography. It's an example of what happens when marketing replaces engineering, and the world applauds the trailer without asking to see the film. Around those images, the story kept changing. At first, Nikola was about natural gas, then it pivoted to hydrogen fuel cells, then to battery electric, then to a mix of all three. Timelines moved the way product concepts did, always forward in the press release, always sideways in real life. Production was next year, then soon, then after this partnership closes. Years passed. 0 trucks were delivered to paying customers. His story is one of constant reinvention without corresponding milestones, a company sprinting from one buzzword to the next while the actual machines lagged behind. When critics pointed this out, the response followed another pattern. Trevor did not invite detailed technical debates. He did not release schematics, test logs, or failure reports. Instead, he attacked motives, called short sellers haters, painted skeptics as enemies of innovation. Because of that ruthless focus on silencing questions rather than answering them, the conversation stayed emotional instead of empirical, which was very convenient for a company with more sizzle than steak. These categories of red flags are not unique to Nikola. Lack of independent validation, cinematic but context-free demos, endlessly shifting roadmaps, and leaders who punch down at critics rather than open the books. These are the same signals flashing around today's hottest stories. The only question is whether viewers, investors, and even partners are willing to notice them before the next truck rolls down the next hill. And to see how far that illusion can go, the story now follows Nikola from desert roads and promo reels to Wall Street itself, where a company with no real truck finally became worth more than Ford. On Wall Street, hype is not an accident, it is a business model. Nikola showed how far that can go, but the next empire of promises is already being built, and the only real protection is learning to read the fine print hiding under the fireworks. There was a time when a glossy prototype on a stage could pass for a real product. Today, the language is more polished, but the trick is the same. A prototype is a one-off showpiece. A pilot is a small controlled trial with hand-holding and excuses. Production is when paying customers receive units at scale, on time, with warranties and complaints. When a company blurs those together, calling a prototype production ready or a pilot commercial rollout, that is not just optimism. It is an example of what happens when marketing is allowed to outrun reality. Nikola's one truck looked imposing under the lights, but there was no sustained production line behind it, no stream of fleet buyers quietly taking delivery. The famous video of a truck in motion was, as investigators later revealed, a prototype rolled down a hill. That is the difference between a machine and a movie. So when the next CEO points to a dramatic demo, the real question becomes, is this a repeatable process or a single magic trick? The second filter is even simpler. Who, other than the company, says this works? Independent third-party tests, safety certifications, regulatory filings, and real customer case studies are boring to read, but they are where fantasy goes to die. Nikola leaned on its own claims about hydrogen costs, battery performance, and refueling networks. Outside data lagged far behind the PowerPoint. When journalists, short sellers, and engineers finally dug in, whole parts of the story fell apart in days. Then there is time itself. His story is one of missed deadlines, revised promises, and quietly shrinking ambitions. A useful habit is to write down every public milestone a company announces, then check 6, 12, 24 months later. Did the factory open? Did the truck ship? Did the guaranteed partnership turn into real revenue or just another press release? A pattern of delay is not random bad luck. At times inspiring and at times chilling, it is a window into culture. Money tells its own story. Where does revenue actually come from today? Nikola's market value soared past Ford, while it had no mass-produced trucks on the road and negligible product revenue, just projections of future hydrogen highways. Ford, for all its flaws, had millions of vehicles sold, plants, unions, warranty claims, and a century of bruises. When valuation depends almost entirely on what might happen in 10 years, any crack in the narrative can erase billions overnight. So here's the pattern interrupt. The next time a stock sparks that little surge of FOMO, pause. Literally, stop the scroll. Take 30 seconds and write down 2 columns. What is known and what is assumed. Known, audited revenue, shipped units, third-party tests, delivered milestones. Assumed, future margins, future dominance, future technology. Seeing the gap on paper drains the magic out of the mirage. Because the next Nikola will not look like a hydrogen truck company. It will wear a different logo, speak a new language, promise a cleaner, smarter, richer life. And in the next part of this story, the camera moves from the factory floor to the trading screen to watch how that promise was turned into a $30 billion bubble in a matter of months. The trading screen makes it look clean. Numbers flicker, charts move, fortunes appear and disappear in silence. But behind every spike is a story of people, promises, and pressure, and Nikola is only the loudest example of what happens when that mix overheats. Because there was a time when investors lost just as much money without any fake rolling trucks at all. Think back to the dot-com boom, when companies with real offices, real engineers, even real revenue, traded at prices that assumed the internet would erase gravity. Pets.com burned cash on overnight dog food. Webvan built warehouses like it was founding an empire. And even honest founders watched their valuations float far above anything their businesses could earn. Then the music stopped. Share prices fell 80, 90, 100%. Many of those leaders had never lied about their code or their servers. They had simply been priced for perfection in a world that never delivers it. Their story is one of ambition colliding with arithmetic. The same pattern played out in housing. Let me take you back to 2006, when a school teacher in California could own 3 condos with no money down, and banks happily packaged those loans into bonds sold as safe. Most builders really poured concrete, really hammered nails, really believed in the American dream. Yet when the narrative of endless price gains cracked, honest developers were wiped out alongside the frauds. Paying too much for a good asset turned out to be just as deadly as buying a bad one. Crypto repeated the cycle in digital form. Not every token was a scam, not every founder a con artist. Some wrote real code, shipped real features, tried to build real networks. But valuations ran so far ahead of usage that even sincere projects traded like Nikola on a hill. All motion, no engine. When sentiment rolled back, the slope reversed. This is where Nikola becomes dangerous in a different way. Its excess is so obvious, so cartoonish, that it makes everything else look reasonable by comparison. Next to a truck that needed gravity to drive, a pre-revenue software company at 40 times sales can feel conservative. Next to a founder convicted of fraud, a leader who merely overpromises quarter after quarter can seem at times inspiring and at times chilling, yet still acceptable. Because the real risk in bubbles is not only fraud, it is valuation. Pay 10 times what a business is worth, and even if it survives, the wealth vanishes from your account and quietly migrates to someone who sold earlier. No courtroom is needed, just time. So the question is not whether another Nikola will appear. The question is whether the next one will look respectable enough, profitable enough, data-driven enough, that when it rolls past on your screen, you no longer recognize that same hill. In the next part of this story, that hill gets steeper, the numbers get cleaner, and the promises sound less crazy, which makes them far more dangerous, and that danger doesn't live in the past. There was a time when the most outrageous promises wore cheap suits and low-budget PowerPoints. Today, they walk on main stages, backed by billion-dollar funds, glossy animations, and production values that could sell you a new life, a new empire, or at least a new way to lose money politely. Look at the traits. A massive slide claiming a total addressable market, the size of a small continent, trillions in potential revenue, billions in projected profit, all flowing neatly from a model that doesn't quite exist yet. Aggressive long-term timelines where losses are a phase, cash burn is a strategy, and profitability is always 3 to 5 years away, no matter what year it is. Many of today's darlings lean on the same quiet assumptions Nikola did, that regulators will cooperate, that subsidies will stay generous, that consumers will happily abandon old habits on cue. It's an example of what happens when the future is treated less like a question and more like a guarantee. Because if the entire story only works in a world with perfect tax credits, perfect charging networks, perfect interest rates, then the real product isn't technology, it's hope. So here's the uncomfortable question. How many of the names lighting up your feed have fully validated tech? Not a carefully staged demo, not a limited pilot with hand-picked users, fully tested, reproducible, boringly reliable systems that strangers can abuse in the real world without everything catching fire. And how many are built on business models that only work as long as a particular subsidy, mandate, or free money environment survives? There was a time when that sounded like a fringe concern. Now it sounds like Tuesday. Nikola's story is one of overpromised prototypes, vague partnerships, and a founder whose charisma ran far ahead of his engineering. At times inspiring and at times chilling, because the pattern worked until it didn't. When you hear a company brag about a strategic alliance, ask what is actually signed. Cash, equity, or just a press release and a photo on stage? When you see a demo, remember the truck on the hill. What would it look like if this product were quietly rolled, not driven? When a leader's personality becomes the main asset, ask whether the numbers still stand if that voice goes silent. Similarity in pattern does not prove fraud. Most ambitious companies are not Nikola. But repeating those red flags should trigger something in you. Deeper skepticism, slower decisions, smaller positions. The goal is not to avoid every risk. It is to avoid confusing a story about future wealth with present reality. Pattern interrupt. After this section ends, pause the video. Literally stop. Write down 3 companies you are most excited about right now. Then, let me take you back to the Nikola checklist from earlier and run each name through it, line by line. If the answers make you uneasy, that feeling is not your enemy. It might be the only thing standing between your family's savings and the next truck rolling downhill. That uneasy feeling is the point, because Nikola's story is not just about one man, one truck, or one spectacular collapse. It's a reminder that there was a time when a sketch on a slide deck, a rolling prototype, and a few TV hits could outweigh a century of factories, patents, and steel. His story is one of vision weaponized, narrative unchained, and markets that love the dream more than the drivetrain. On one level, Nikola is proof of how powerful a story can be. A zero-revenue company, no mass-produced trucks, yet a valuation briefly higher than Ford, which was quietly building millions of vehicles in the background. That is the power of a future painted in hydrogen blue and battery green. At times inspiring and at times chilling, the rise shows how quickly money, attention, and power rush toward anyone who promises to bend the carbon curve and make everyone rich while doing it. But look closer, and Nikola is a mirror. It reflects a collective hunger for shortcuts, not just Trevor's personal greed. A shortcut to wealth for traders riding a SPAC at $30 billion. A shortcut to decarbonization for ESG funds that needed a clean, heroic story in the portfolio. A shortcut to technological salvation for a culture that prefers a viral clip of a truck driving to the boring reality of engineering risk and manufacturing hell. Because of those cravings, unchecked ambition stopped being a founder problem and became a systemic one. Bankers earned fees for pushing the deal. Analysts earned clicks and commissions by repeating the hydrogen empire narrative. Media outlets earned views by putting the charismatic salesman on screen. Retail investors, hungry to escape their own version of poverty or stagnation, piled in. The incentives all pointed in one direction. Believe first, verify later. Trevor Milton simply rode that wave further than most. There was a time when he styled himself as the next Elon Musk, talking about gigafactories, vertical integration, and a future where diesel was dead. Then came the Hindenburg Report, the rolling downhill video, the subpoenas, and finally a jury verdict that turned the aspiring tech icon into a convicted felon. Because markets, for all their delusions, eventually demand receipts, even if it takes years and a courtroom projector to reveal what was really under the hood. It's an example of what happens when narrative gets unmoored from reality, when ambition is rewarded long before execution, when the checklist is ignored because everyone is afraid of missing the next Tesla. Nikola's trucks may have moved on gravity, but the forces that lifted the company were far more powerful. Cheap money, climate anxiety, hero worship, and a casino market structure that still exists today. Those forces did not roll back down the hill with Trevor. They are waiting for the next story. And the question now is simple. When that story appears, will you recognize the slope? Those forces did not just lift a stock chart. They lifted real people into the blast radius. When Nikola's ghost truck beat forward on paper, it didn't feel like a crime scene yet. It felt like a mission, a revolution, a ticket into the clean tech empire that would finally break oil's grip. Inside the glass offices in Arizona, there was a time when the mood was almost religious. Young engineers left stable jobs at legacy manufacturers, took pay cuts, told their families they were joining the future. They wore the logo like armor, late nights, slide decks, simulations, all built on the belief that the truck outside the window would one day roar to life. Then the Hindenburg Report landed, the video was exposed, and suddenly every meeting started with the same unspoken question: is any of this real? Because of that cloud, every routine layoff became something darker. People who had moved across the country for the mission were escorted out with cardboard boxes, their stock options evaporating in real time. Recruiters stopped calling. Friends asked carefully what it had been like working for the fake truck company. Careers meant to be at the heart of decarbonization were now footnotes in a fraud case, and the cost was measured not just in money, but in years of life spent chasing a mirage. Outside the building, the blast moved down the supply chain. Suppliers had retooled factories for hydrogen components, custom battery packs, exotic materials, all on the strength of glossy contracts and soaring forecasts. Partners like GM had announced billion-dollar alliances, staked their own reputation on Nikola's technology, and then had to reverse course under the glare of cameras. Purchase orders were canceled. Tooling sat idle. Small firms that had hired for growth suddenly faced layoffs of their own. It's an example of what happens when one company's exaggeration becomes everyone else's contingency plan. And the damage did not stop with Nikola's logo. Capital is a nervous animal. After a fraud this loud, investors who once threw money at any zero-emission dream began to demand proof, then more proof, then collateral. Legitimate hydrogen startups, battery innovators, and grid-scale projects walked into meetings and were quietly punished for crimes they did not commit. Because one salesman overpromised the future, the cost of building the real thing went up. Let me take you back to the opportunity cost. While analysts dissected Trevor's tweets, while TV segments replayed the rolling truck in slow motion, attention drained away from more grounded decarbonization work. Boring but vital rail electrification, heat pumps, transmission lines, incremental efficiency gains. His story is one of misplaced focus, at times inspiring and at times chilling, because it shows how easily a charismatic narrative can hijack the world's scarcest resource, serious attention. So the next time a founder steps on stage, sketches salvation on a slide, and promises to save the world with a prototype that never quite appears, will anyone remember the ghost truck that once beat Ford? Or when the music starts again and the crowd leans in, will history quietly begin to rhyme? There was a time when a truck rolling down a hill could add billions of dollars of wealth on a screen. That's the world viewers are investing in now, and that means the default setting can't be trust. It has to be respectful skepticism. Respectful because some wild stories do come true. Skeptical because in complex fields like hydrogen fuel cells, AI, biotech, or quantum anything, most people don't really know what's technically possible and what's fantasy dressed up as engineering. When a founder promises a revolution in energy density or claims costs will fall 90% in 3 years, the right instinct is not to cheer first and research later. It's to pause, to assume there are pieces missing, and to ask who has actually verified any of this. His story is one of charts, press releases, and prototypes that never quite became a fleet. Your story does not have to be. One simple rule: treat every Nikola-like name as guilty until proven innocent in your portfolio. That means capping position sizes in story stocks, never letting a single flashy narrative swell into 30 or 40% of your life savings, no matter how righteous the mission sounds. Diversify across boring sectors, across geographies, across business models that already throw off cash. If a company has no revenue, no product, and no clear path to either, it should never be the backbone of a family's future. Because of the way hype works, the loudest voices viewers hear are usually the most optimistic. It's an example of what happens when echo chambers meet easy money. To counter that, build a habit of deliberately seeking dissent. Before buying any high-flying name, read the short reports, the angry blog posts, the technical deep dives from people who clearly don't like the company. Look for the engineer explaining why the battery chemistry makes no sense, the accountant pointing out that the customer deposits are actually refunds waiting to happen. If the bull case survives the harshest critics, that tells a very different story than a sizzle reel on CNBC. And then there are the companies nobody brags about owning, the ones that make pipes, garbage routes, software licenses, replacement parts. They don't have ghost trucks rolling downhill. They have invoices, contracts, and cash. Over decades, those dull, cash-generating machines often build more real wealth than the flashiest next big thing that never ships. Pattern interrupt. When this video ends, don't click the next recommendation. Don't chase the next charismatic founder. Instead, open the brokerage app, scroll through every position and circle the ones that feel like Nikola. Huge promises, tiny profits, and a story viewers secretly love too much to question. Finally, ask one hard question. If the hill disappeared and the cameras turned off, how much of this portfolio could still move under its own power? There was a time when a story about the future could outweigh a century of metal, factories, and engines. Nikola, with no real truck on the road, briefly stood taller than Ford, an empire built on more than 100 years of steel and gasoline. That imbalance sounds insane on a spreadsheet. Inside the human brain, it makes perfect sense. Long before the numbers land, the story lands. The brain does not start with discounted cash flows. It starts with pictures. A founder on stage, a gleaming prototype, a promise to end diesel, save the climate, and make investors rich along the way. The narrative hits the emotional circuits first, and only later do the analytical circuits wake up and ask what the revenue line looks like. By then, for many people, the story has already won. Founders and marketers understand this instinctively. They do not open with footnotes, they open with destiny. Let me take you back to those 2020 presentations. Hydrogen highways, zero-emission convoys, a new industrial revolution built not in Detroit, but in Arizona. His story is one of childhood struggle, self-made grit, and a visionary who sees what legacy automakers can't. At times inspiring and at times chilling, this is the language that turns a pitch deck into a movement and a prototype into a prophecy. Early in a technology cycle, that prophecy has almost no competition. There is no long operating history, no decade of margins to compare, no reliable way to model adoption curves, so stories rush in to fill the vacuum. It's an example of what happens when hope, fear, and greed all point in the same direction. SPAC booms, ESG mandates, and a market desperate to believe that the next Tesla is hiding in plain sight. In that fog, both great fortunes and great frauds are born, often using the same vocabulary of disruption, mission, and world-changing impact. This is why the goal is not to shut stories out. Stories are how humans compress complexity into something that feels like life. The danger comes when a narrative is treated as truth rather than as a hypothesis. A good investor listens to the pitch, feels the excitement, then quietly asks, what would have to be real for this to be justified? Revenue, prototypes, partnerships, unit economics. Each claim becomes a test, not a commandment. Nikola's story cleared every emotional checkpoint. Clean energy, big trucks, a charismatic salesman who talked like a messiah of mobility. For a brief, surreal moment, that narrative dethroned Ford on the market scoreboard. The credits rolled on that illusion faster than most expected, but the pattern will return with a new name and a new logo. Before the next premiere starts, the question is simple. Which stories deserve your money, and which ones should end before the final scene? There was a time when a PowerPoint deck and a rolling YouTube clip could outweigh a century of steel, factories, and union paychecks. Nikola, a company with no mass-produced truck, briefly wore a crown heavier than Ford's. An empire built not on assembly lines, but on expectations, ESG slogans, and a salesman's voice that promised a clean hydrogen future. Let me take you back to the beginning of that story. Trevor Milton came from the world of pitches, not patents. His life was shaped less by engineering textbooks and more by the rhythm of the sales call, the confident pause before saying, "This changes everything." He wrapped himself in the language of disruption, talked about ending diesel, saving the planet, and making long-haul trucking silent and green. On paper, it looked at times inspiring and at times chilling. a visionary for some, a little too smooth for others. Nikola's promises escalated fast. Hydrogen stations blanketing highways, fuel cell semis with stunning range, battery tech that would leapfrog incumbents, partnerships with giants, billions in reservations. The company rode the SPAC wave in 2020, merged into the public markets, and watched its valuation rocket past $30 billion. For a surreal moment, a pre-revenue startup with 0 production trucks was worth more than Ford, a family name that had put millions of vehicles on the road and survived wars, recessions, and oil shocks. Underneath, the foundations were already cracking. The Nikola 1 on stage was a stage prop, incomplete, quietly towed and cabled. The dramatic video of a truck gliding down a desert highway turned out to be just that. Gravity doing the hard work while cameras did the rest. Claims about hydrogen costs, battery breakthroughs, and in-house technology were inflated, repackaged, or borrowed. Yet the illusion held because the surface looked so convincing. GM announcing a multibillion-dollar partnership, big reservations, glossy renderings of stations and depots that didn't exist. Then the pattern broke. Hindenburg Research published its report, alleging dozens of false statements, dissecting the video, the prototype, the hydrogen math. Markets flinched. GM suddenly slowed its embrace, renegotiated, and then retreated to a much smaller, safer arrangement. Regulators arrived. Trevor resigned as chairman, went from media darling to defendant, and finally to convicted fraudster, found guilty of misleading investors about the very technology that had made him rich on paper. His story is one of incentives and illusions. When cheap money floods markets, when SPACs reward speed over scrutiny, when ESG labels become a shortcut for virtue, it's an example of what happens when due diligence turns into a formality instead of a shield. Markets can crown illusions, hand them tens of billions in wealth and power, but they cannot protect them forever from physics, audits, or prosecutors. If you've stayed with this story to the end, you're already ahead of the crowd that only shows up for the IPO pop and the meme spike. The real edge isn't finding the next Nikola, it's learning how to see it coming. In the final section, it's time to turn this cautionary tale into a checklist you can actually use before the next revolution rings the opening bell. So here's the playbook, not for finding the next Nikola to ride it up, but for seeing it early enough to protect your money when everyone else is still hypnotized by the hill-rolling truck. First rule, independent validation. Not what the founder says, not what the glossy deck claims, not what a hype segment repeats. Who outside the empire is actually testing the product, using it in real life, and staking their own reputation on it? There was a time when Nikola could flash partnerships and press releases, yet almost no freight company could point to a fleet quietly hauling loads week after week. In a world of narratives, outside proof is oxygen. Second, prototype versus production. A prototype is a science project. Production is a factory, a supply chain, a warranty department, angry customers, and real-world physics. Nikola had a show truck, a staged video, and grand hydrogen promises. Ford had millions of vehicles on the road. Treat any company that blurs that line as a speculation, not an investment. That doesn't mean never touch it. It means size it like a lottery ticket, not like a retirement plan. Third, timelines that make sense. If a founder promises to overhaul an entire industry faster than most families can refinance a mortgage, slow down. Real manufacturing ramps in years, not quarters. Real infrastructure is delayed by permits, regulators, weather, and human error. When a story ignores those frictions, it's an example of what happens when PowerPoint has more power than physics. Fourth, transparent communication. When questions hit, do the answers get clearer or more mystical? Nikola's tale shifted from hydrogen to batteries to partnerships, from proprietary breakthroughs to vague roadmaps. A serious business can say what is done, what is not, and what might fail without needing a new buzzword every quarter. Finally, consistent delivery, not one dramatic demo. A chain of promises made and quietly kept. Revenue that matches headlines. Milestones that arrive on time more often than not. His story is one of relentless execution. Nikola's was one of relentless announcements. This checklist is not just for stocks. Use it on crypto projects promising effortless wealth, on crowdfunding campaigns selling miracle hardware, even on career opportunities that swear you'll be partner in a year. Independent validation, prototype versus production, realistic timelines, transparency, delivery. The pattern is the same whether the prize is equity, tokens, or your next decade of life. At times inspiring and at times chilling, markets can hand out billions overnight to whoever tells the most thrilling story. Protecting the downside is not cowardice. It is how wealth survives long enough to compound. So before the next revolution rings the opening bell, what company, project, or empire do you want to run through this playbook? Leave a name in the comments, and in a future deep dive, this checklist will be turned on them. There was a time when a company with no real truck was, on paper, worth more than Ford. Not more than a struggling startup in someone's garage, not more than a niche supplier, but more than the machine that had spent a century stamping out millions of vehicles a year. That single comparison is like an X-ray of this era's relationship with reality. The bones are still there, but the image is badly distorted. Let me take you back to that moment in 2020. Nikola rode the SPAC wave, ESG enthusiasm, and zero-interest money straight into the stratosphere. A salesman with a microphone and a dream briefly commanded a valuation above $30 billion, while Ford, with its factories, union contracts, and very real trucks, traded like an aging heavyweight. Spectacle beat production lines. A rolling downhill video beat a working drivetrain. PowerPoint beat proof. His story is one of personal choices colliding with a system hungry for the next miracle. Trevor Milton did not wake up as an inevitable force of nature. He made decisions. He exaggerated timelines, leaned on half-truths, and let investors believe in hydrogen highways that did not exist. That is personal responsibility. But it is also an example of what happens when a market rewards confidence more than competence, and when the loudest narrative can temporarily overpower the quiet grind of engineering. Because of that mix of greed and ambition, money moved at scale. Retail traders, pension funds, hedge funds, even industrial giants like GM all stepped into the glow. Term sheets were signed, partnerships announced, and an empire was drawn in press releases long before it was drawn in steel. By the time the Hindenburg report landed, by the time regulators started asking why the famous truck needed a hill to drive, billions had already changed hands. Accountability did arrive, but only after the wealth transfer was complete. Investigations followed. The SEC and DOJ pulled on threads, internal emails surfaced, and the performance shifted from product launch to courtroom. Milton was convicted of securities and wire fraud. Nikola paid fines. Investors absorbed losses that in some cases erased years of patient saving. The market did what it always does eventually. It repriced the dream ruthlessly, without sentiment for anyone's life or family. Yet leaving the story there would be too easy and too comforting. Because the system that made Nikola possible is still here. The incentives are still tilted toward hype. The next charismatic founder is already rehearsing on a different stage. So the question becomes, where does informal accountability come from? From viewers who ask, why a pre-revenue company is valued like a century-old manufacturer. From investors who read footnotes instead of only headlines. From refusing to be seduced by unearned certainty, no matter how sleek the deck or how heroic the mission sounds. At times inspiring and at times chilling, markets can still fund genuine breakthroughs, but vigilance is the entry fee. In a world where fortunes can be minted and erased between one trading session and the next, the only real protection is a refusal to outsource judgment. And that, more than any regulation, is what will decide whether Nikola is remembered as a warning shot or a blueprint. Vigilance is the entry fee. But there was a time when voices like this barely made it through the door. The algorithm rewarded the loudest promises, the shiniest prototypes, the most dramatic to-the-moon thumbnails, and long-form skeptical analysis was treated like background noise. If the story of a $30 billion mirage felt useful, hitting like and subscribing is not just a favor, it is a signal. It tells the platforms that slow, careful, sometimes uncomfortable breakdowns deserve space next to the hype machines. Because when a company with no real truck can be worth more than Ford, the problem is bigger than one salesman and one SPAC. It is an example of what happens when attention becomes a currency, and everyone is bidding with their savings. That is why engagement here is not only about growing a channel, it is about bending the feed a few degrees back toward doubt, receipts, and context. A small correction, but enough small corrections can change the current. If someone in your life is buzzing about the next Nikola, the next hydrogen revolution, the next, this time it's different EV empire, sharing this video with them is not a lecture. It is a story of money and power, of how a charismatic founder can stand on a stage with a PowerPoint and make people feel richer just by listening. Families have lost real wealth to that feeling. Friends have emptied savings into charts that only went one way on the slide deck. So send it to the cousin who trades options on lunch breaks, the parent who just discovered SPACs, the friend who treats every new ticker like a lottery ticket. Let the rise and fall of Nikola do the arguing. Dry facts land better than holiday dinner debates, and this should not be a one-off. Down in the comments, leave the names of other companies, sectors, or fads that feel like PowerPoint billionaires. Companies where the slides look like science fiction, but the factory floor looks a lot like an empty warehouse. There was a time when railroads, radio, and dot-coms all went through this same cycle, and his story is one of recognizing the rhyme before the crash. Those suggestions help decide which empires and illusions get dissected next. Consider bookmarking or saving this video as well. Before the next big speculative bet, before the next hot tip from a coworker, let me take you back to the rolling truck that needed a hill to move. Use it as a personal circuit breaker, a reminder that due diligence is cheaper than regret. Because this channel's mission is not to dunk on failures for sport. At times inspiring and at times chilling, these episodes are about understanding the forces that shape wealth, power, and risk in this era. Nikola is one chapter. The larger story of how hype, hope, and ruthless ambition keep rewriting the market is still unfolding, and the next chapter is closer than it looks. So before the next video loads and the algorithm hands over another shiny story, pause for one quiet second and look at your own life. Not at Nikola, not at Ford, not at Wall Street. At your portfolio, your career, your family, the people you trust when the numbers do not quite add up. Where are you riding a narrative downhill and calling it momentum? Maybe it is the stock that can't miss because everyone on your feed says it is the future. Maybe it is a job that pays well but survives on buzzwords instead of real results. Maybe it is a relationship propped up by promises that never quite reach the driveway. There was a time when Nikola's glowing press releases felt just as solid. Let me take you back to that silent truck on the empty road. Perfect lighting, perfect angle, perfect story. Behind the camera, a crew had to find a hill steep enough to fake power, steep enough to turn gravity into marketing. Investors watched the video, saw motion, and called it progress. The question now is how often the same trick works on you without the dramatic drone shot. Because gravity does not care about valuation. In markets, as in life, gravity always wins eventually. Revenue that never appears, product launches that never happen, promises that never become working machines will drag any empire back to earth. The only real choice is whether you are standing on the slope with a calculator or sitting inside the truck as it picks up speed, telling yourself that acceleration means the engine must be strong. His story is one of salesmanship weaponized, money raised on vapor, power built on headlines, and then erased in courtrooms. It is an example of what happens when spectacle outruns substance for just long enough to cash out. That pattern is at times inspiring and at times chilling, because the same tools that build real wealth can also construct a very convincing mirage. So the next time a too good to be true pitch flashes across your screen, ask one quiet question before you click buy, join, or follow. Where are the working trucks? Where is the cash, the code, the product, the life behind the story? If the only answer is a deck, a demo, or a dream, step back from the hill. And as this frame fades, hold that last image. A gleaming, silent truck on a long, empty road, cameras rolling, investors cheering, and beneath it all, an invisible slope that everyone chose not to see, until the day another company, another founder, another perfect story appears at the top of an even higher hill.